I want to talk a little bit about your outlook for oil prices, because the prices actually defied just about everybody's predictions from a year ago at this time. You're looking for Brent oil to be somewhere in the $60 to $80 range.
Right.
Do you have a prognosis for WTI too?
Well, about $8 or $9 less, although that's going to close as you see these bottlenecks in the Permian are resolved with the new pipelines that will come on, the new ports that are going to come on, and then that will tighten over the course of the year.
I mean, that's really interesting. Part of what you think is happening is we haven't seen as much production that's been brought online in the United States because of a lack of pipelines. You think that changes in the third quarter?
Yeah, I think we're going to see a surge of production, particularly in the third quarter. And I think overall we expect U.S. production to be up 1.5 million barrels a day, which is interesting because we also see global demand being up about 1.5 million barrels a day. So that's going to put some pressure on the exporters, this Vienna alliance.
Yeah, I mean, I also was looking through what we can expect from OPEC. You say they're on a charm offensive right now. How likely is the rest of the world to kind of buy that?
Well, I think the charm offensive, on the one hand, it's the charm offensive. The other hand is they're cutting back. They and the Russians, the new partners, are cutting back to try and balance the market and get it stronger. So last year, the average price for Brent was 71. I think, at this point, it looks like it'll be sort of in the high 60s. But all the factors you've just been talking about, particularly about China, trade, all of those things are going to really weigh on the oil price, because the oil price is also going to play off all these macro factors.
Yeah, I mean, that's what we've mostly talked about, at least so far, has just been the supply side of things. It's the demand picture that people really have a lot of questions about, particularly if you look at China slowing more than had been expected.
It's the demand and the expectations demand, the sort of emotion around it. And so you see the oil price very much responding to outlooks for the Chinese economy, outlooks for global trade, a trade war. If we see a resolution by March of the trade battle between the U.S. and China, I think that's going to be positive for oil. And in fact, part of the way that gap is going to be filled in that trade balance is with exports of U.S. oil and gas to China.
Speak to our favorite topic. We always talk about Saudi Arabia, the relationship between the United States and Saudi Arabia, and the price of oil and what they need the price to be to make their economy work.
Well, of course, you can change your budget, but you see a gap between the Saudis and the Russians on what they want. The Russians say $60, $65 is fine. The Saudis certainly want a higher price.
They need closer to 80.
That's the number that gets used, and because they have so many things that they're trying to do at the same time.
And so how does that play itself out in terms of that relationship?
Well, I think what we've seen is that Saudis have done the major part of this recent cut, but I think that both sides are going to continue to. That relationship is important to them, not only for oil, but for geopolitical reasons for both sides.
Last year we were here, everyone was crazed about a potential Aramco IPO, of course, that never happened. They now say that's going to be in 2021. Do you want to handicap it?
Well, I think what they have on their agenda right now is to do this acquisition, or the 70% acquisition of SABIC, the large petrochemical.
That was on their calendar a year ago, too.
But that's what's happening right now. So I think the IPO, it's not tomorrow.
Do you think it's ever?
I think that they'll make that determination. I think they have to look at what it means to be a public company in this and all the demands.
Does it take 4 years to figure that out?
Well, I think the currents go back and forth. But I think that the SABIC thing was, in a sense, took the place, and that's where their focus is right now.
Dan, let's go back to China, because you make it seem as if things get taken care of with this trade dispute, that the economy there will pick up instantaneously. But there's a lot happening there, a lot of weakness.
I think there's a lot, and I think in a way you were talking about, I think I was in China in December, and you could really see there is a divergence going on. It's very hard now to see in the United States people who say, this relationship with China is great, we got to build it, we need more interdependence. Democrats and Republicans are both moving away, and the Chinese are certainly much more nationalistic. So I think there's a bigger split that's going on, and yet neither China nor the United States is going to go away.
And if you just look at the economic numbers, I mean, they were saying 6.6% growth for 2018. I talked to a lot of people who have come back recently, and they think the numbers are actually much worse than that. Is that what the oil market thinks, too?
Well, I think the oil market's responding to that, and I think our own economists in China think that the actual growth rate is lower.
If you had to look to anything that you might think would come up as a surprise this year when it comes to oil prices, what would you guess? What would be
well,
most unexpected?
I think the question mark that's out there is phase 2 of the sanctions on Iran. Mm-hmm. And I think that's a question that is going to hang over the market. And last time the U.S. said we want zero exports, it turned out, well, we want 40% export. So the question is, well, how hard? And that comes up, I think, in May.
You meaning, will some of those exemptions that were handed out to other countries get taken away?
Either taken away or shrunk down more. And I think that the administration has said we're going to be tougher on it. And it's really focused on two countries, which is China and India.
And that number, which is, I mean, you can point to oil prices being down for a large part because people were surprised by all those exemptions that were coming out. What's the conventional wisdom in the markets right now? Is it fool me once type of situation, or are they really thinking that this time it could, some of those?
I think at this point they're not thinking it's going to go to zero. They're thinking there's going to be further, quote, progress and subterfuge as to what the cuts are, but there'll be pressure to continue to bring that down.